Hi, Scott. Thank you so much for being here with us today.
Hey, Sarah, I'm excited. It's my pleasure.
So, for those of you who don't know, I'm Sarah Jacobs. I'm one of the co-owners of Jacobs Burger, and I have the absolute pleasure today of interviewing Scott Greenberg. He is of SGS. I always get this wrong because it's so many letters. SJG Private Wealth Management. He is a financial planner, a certified financial planner, among other important designations, and he has the very smart designation of being my personal financial planner. So I have a little bit of credibility with this guy. So Scott, why don't you tell us what you do, how you do it, and who you do it for?
Yeah, absolutely. And of course, being your guy is my favorite title and designation.
Ooh, don't tell my husband.
As you mentioned, I am a certified financial planner, which part of that means that I act as a fiduciary for all of the families that we're blessed to serve. And I founded SJG Private Wealth Management about 10 years ago to better, serve individuals and families, successful, responsible ones, through their personal financial matters. So part of it is managing their money, and part of it is helping them take a goals-based approach to reach their financial destination.
Now, Scott, being a fellow Terrapin and an alumni of University of Maryland, I know that you do have an office in Virginia, but you also have work here in New Jersey, right?
That's correct. So I'm speaking to you from my New Jersey office. The headquarters where our staff is, et cetera, is in Northern Virginia, just about 10 miles west of DC. And we serve clients in many, many states, but in normal times, I go back and forth quite a bit. Unfortunately, I haven't been down to the DC metro area in several months, but looking forward to doing that hopefully later this year.
So live today from Point Pleasant Beach?
From Point Pleasant Beach, that's correct.
I hope the weather down there is slightly better than the weather up here, because you can't decide whether it's sunny or cloudy, but at least you have the ocean down there to look at when you're quarantined and stuck inside.
That's true. We do have that.
So you talked about normal times, and that's a little bit of what we're going to talk about today, right? How we have money markets, or markets, money, and mayhem, what to do with your financial investments next. So can you give us a little bit of a status update of what we're looking at today, while we're sort of like, 8 weeks into COVID right now, 8 weeks into quarantine, some of us in larger lockdown than others. What do the markets look like?
Well, it's a great question. It's also a very broad question because, of course, they've been answering this 24/7 on TV, going back towards, the end of February. So there's a lot to discuss. But from a very high level, the capital markets, which are basically the securities that people trade on the exchanges, something like the S&P 500 you can think of, which is consists of about 500 large U.S. companies. It's been a wild ride. I mean, starting towards the end of February, I think most of the major markets peaked on February 19th, and then they drew down in an unprecedentedly quick fashion to bottom, at least in the short term, on March 23rd. So in just over a month, the major indices went down over 30%, which again, that's the fastest that's ever happened in the history of the market. Since that point, we had the worst Q1 in, I think ever. And then we had the best April, since the 70s in the major indices. So it's been volatile, to say the least. That would be an understatement. As we sit right now, the major markets are about 12 to 16% down for the year, a little bit further than that off of their peaks in mid-February. And, there's a lot more to talk about there that maybe we can get into. So that's the capital markets. And separate from that is the economy. And the economy, it's been divorced from the capital markets right now. And that's causing a lot of people a lot of anxiety, because they look at the economy, they see it's been, forced to completely shut down. This has never happened before in this way or in this scale, not even close. And there's just more uncertainty even now. So there was probably more in March, but there's even now more uncertainty than we've ever seen before. And so the economic models are all thrown off. It's very just uncertain right now. And the way that the market has behaved going up very considerably over the last month, even from those terrible losses in March. And we try to make sense of that in a world where the economy is really and the world economy I'm talking about is behaving much different. And so that's a difficult thing for people to understand, that the markets and the economy are different. They behave differently. They're certainly related. But that's sort of a snapshot in what we've seen so far in this first 4 months, let's say, of the year, which feels like more like 4 years for a lot of us.
So I know that for you, probably particularly, there were probably a lot of late nights and really early mornings with a lot of frantic people, like, I don't know who could have called you in a panic about their portfolio. But I'm sure you've been fielding a lot of questions from all of your clients, both low and high, as to, you know, what's going on? What do we do next? How do we recover from this? Are there opportunities for growth here? What do you see has been like the most consistent trend for you in terms of questions that are being asked of you, but also advice that you're giving out on a regular basis?
Yeah, that's a great question. And, you know, I won't talk about anybody in particular, but I'm sure people will agree for any of our clients that are watching this, that, you know, the thing that we want to do at all times, but especially now, is communicate. We want to listen as best as we possibly can, use our active listening skills that we've worked so hard over the years to try to perfect, and communicate what are sometimes very sophisticated, complicated topics in clear language, so people can feel like they're being informed, not confused, and they can make confident choices. And that's really what we do. So, you know, we're very thankful that the people we've worked with, we're not, you know, we see our job as we're not talking them off a cliff. We don't want them ever to get near a cliff. We want them to always be properly positioned and understand the risk that they're taking. So the first calls that we made to every single client that we have, you know, took place towards the mid to late February, when we realized this had the potential at that point, I should say, because it wasn't a sure thing then, to bring this market and this economy down in a way that we certainly haven't experienced in a while, let's say. And obviously that's turned into something that's much bigger than anybody has ever experienced. And through having those lines of dialogue, our position was, look, most of our clients understand, most of them, that we don't see the future. And
no
so
crystal ball? Really?
no crystal ball. No. We're still looking for that one. But, you know,
If you
they
find
understand.
it, let me know.
Yes, you'll be my first call. You know that. So it's never about predicting the future. It's always about seeing the present with clarity. And what we want to do is help them understand what the risks are in their portfolio, but also in their financial planning in general, and help them address those risks. And even if they say, you know what, I understand that risk. I understand that I have a lot of stocks and those can be, exposed to volatile times. I understand that whatever, I'm underinsured, and if this happens, then this will be the impact. As long as they understand that and they check the box and they say, I understand the risk, I'm going to even stay the course or press the gas or whatever, that's fine. We've done our job, because our job is not to make decisions for people. All our clients are smart enough to make their own decisions. They just need to tune out the noise and have somebody who's on their team to help, again, inform them so they can make confident choices. So for us, it was really a simple conversations. Hey, look, this is what we're seeing. Maybe nothing will happen. Maybe this will be a headline in February we never read again. But if that's not the case, this is definitely something that has the potential to take, and these are my exact words in February, to take this market down another leg or two. And that's after we had seen, I think it was the 24th and 25th of February, where the market dropped 1,000 points each day to start the week. So having those conversations, with people and just saying, look, here's the risk. What do you want to do? They were busy days talking to people, but it wasn't scrambling to try to make emotional choices. It was, these are the risks we're comfortable with. This is the proper way to structure the portfolio to address those risks. And now we go into it with open eyes.
So what I'm hearing from you is that even now, 8 weeks past, this massive crash that the market saw and the instability in the economy, is that we're still talking here about strategizing. It may be a different strategy than some of your investors had, taken in the first place, and we may be repositioning or rebalancing or, redistributing portfolios, but we're talking the same language we've always been talking in terms of how do we achieve a goal? You want growth, you want to diversify. The timeline is of course different for all these different people, but it's still the same conversation, just in a different structure. Is that fair to say?
That's very fair to say. It's always about strategy, and part of that is diversification. And it starts with just having your financial house in order. So things like, having an emergency fund, which a lot of people didn't have, we found out. But a lot of people did, and they were in a much better situation with what we saw, just this past month and what's been going on. But things like having an emergency fund, taking a goals-based approach, because without knowing what you're shooting for, it's really hard to get there. And it sounds cliche, and the goal doesn't have to be, the number you carry around when you're 65, like the old ING commercial, but you do have to have some idea of what you're trying to achieve. And that way you can regress back to figuring out how much you have to save, what level of risk you might want to take in order to, try to reach the growth rate that you need to reach your goals. So you have to have a strategy. Now, what's changed is, and what's always changing is, what are the opportunities and what are the risks? And diversification has changed a lot. It always changes a lot in terms of what you want to own and for what reason. But, it's just constantly paying attention to where the risks are and where the opportunities are. And, again, there's so much we could get into with all of this stuff because we're just scratching the surface, but there's a lot of concerns right now in that vein of diversification, because you just take something like, like stocks and bonds are always the things that people kind of put in their pie chart. They're 2 of maybe 10 asset classes that most people should have, but even subsets of those and those asset classes themselves, where are the risks right now? There's a lot of risk in the bond market right now. And there's a lot of people who just don't understand that because they see bonds as safe and stocks as risky. And really, there are just almost infinite shades of gray, and then other asset classes that, anybody who's talked to me for a little while knows that we spend a lot of time researching cognitive biases and behavioral finance. And one of the ones I reference all the time is the Dunning-Kruger effect, which all that says is essentially that you don't know what you don't know. And the more you know about something, the less confident you'll likely be and the more nuanced you'll think. And this is it's difficult to kind of define, but it's immediately obvious to somebody who's an expert, because if somebody was talking to you at a dinner party about family law, you would know in 30 seconds if they knew what they were talking about or not. And they wouldn't stop them from having polarized black and white opinions, but you would know right away. And the same for doctors and mechanics and financial planners. So we have to be honest with ourselves about what we know and we don't know. And one of the things about my world, and I'm sure yours, is that there are so many options out there that you'll just simply never get introduced to unless you work with a professional, because there's just too much to know and options out there and what's available and changing. So yes, the strategy you have to have a strategy. You have to have some sort of goal to work around, and then you have to know, how to have that strategy manifest itself in a portfolio that's aligned with your goals.
Well, you and I have a similar type of job, in the sense that people come to us trusting us with one of the most important things in their world. For you and me, it's money, but it's also, family, and it's security, and it's safety. I think our worlds cross over in that respect. And one of the questions that I have for you, and that a lot of my clients have for me, is here we are in the middle of this unprecedented time, and we are negotiating still divorce agreements and divorce settlements, a lot of which include equitable distribution of assets and liabilities. And for some of us, we were in the middle of negotiating a very complex settlement agreement that contained assets, in the market, and all hell broke loose for us. And clients are now asking, can we make these deals? What can we do? How do we recover from this? How does this affect our divorce settlement? And of course, I realize that each circumstance is nuanced, but what would you say to those people? Like, how would you give those people advice about moving forward and creating a strategy for themselves to be able to accomplish the goal, which is to get divorced?
Yeah, obviously I can't, I'll just say it explicitly, because I know that there's a, we're in a highly regulated industry that, I'm not in a position to give legal advice, but
Of
having
course
said
not.
that, I think one of the things that's helpful in terms of assets are, you have to understand there's different types of assets. So obviously there's ones that depreciate and there's ones that appreciate. There's streams of income and cash flow that go both directions. And then there's, present value. And in order to see, what is equal to one or the other, you have to be able to convert them back and forth. You have to know, there's a pension here that's $1,000 a month, and there's a portfolio here that's, $500,000 and isn't growing anymore. Well, which one's worth more? Well, it depends on a lot of stuff, but you have to be able to regress those back. And, it depends on the age of the person. Is it guaranteed for life? Is there an inflation? All this different stuff. But the point is you have to be able to convert these assets into numbers in order to compare them. And then some might find more value in the other. So it is a very difficult circumstance. And then the other part of it is taxation, So one of the benefits of liquidating something like a security portfolio or a stock portfolio when the market is down is the taxation is less than it would be otherwise. So there's ways to think about how to, and obviously, if you have retirement assets, then, if you're doing something like a quadro, you don't have to pay some sort of penalty and stuff like that. But if you're going to be liquidating stuff in order to make the parties equal, equitable, then you just have to understand the tax treatment, but there's things to use to your advantage during these volatile times. I would say the biggest thing is that, in situations where there's a spouse that might kind of control the family finances, and then there might be a spouse that doesn't, and, it could be, people have all different ways of setting up their household finances. There's
Right.
ours, his, hers, and mine, there's whatever. So everybody's a little bit different in that way, but you have to, when you are getting divorced and when you're trying to bring that to conclusion, you really have to know what's available. So I would say, have all the information, educate yourself on what is available, or is this house we're going to live in it? Is somebody going to take it? Or are we going to sell it? And then we're going to split up the proceeds. And then where are we going to live? Are we going to rent? Are we going to own? Well, that's a big decision in itself right now. I mean, interest rates are very low. Mortgage rates are probably going to be very low for a while.
Definitely.
But there's a lot of serious questions about real estate also, so it just adds to the uncertainty in the economy. It's a very uncertain time, to obviously get divorced, which is a part of people's life where they almost always, they almost always feel like that, there's a piece of them missing and they just have to pick up the pieces, and it's very difficult. But I think that what I would say is, you have to be able to convert the assets into like numbers to compare. You really have to know what you own and why you own it. And then when the dust settles and it is finalized and you're left with these assets that are yours now, but kind of now what do we do with them? If you're not the expert, find one that you know and you like and you trust, and is hopefully a fiduciary, and have a conversation with them about your goals and objectives. Because again, there's an entire universe of asset classes that people just usually are not that familiar with. And if you need to create a retirement income stream for yourself that you can't outlive, that's a different goal than if you just have a chunk of money and the game plan is we may never spend it and we just want to grow it as fast as we can for the next generation or philanthropically or something like that. So again, just know what you own and take a goals-based approach. And if you're not the expert, find one. And if you do those things, you're going to be okay.
And I think it would be fair to say too, and I think you would agree with me this, don't wait until your divorce is over and you need to reinvest all these assets or figure out what your goals are. Establish your goals earlier. Find your expert during the process. Figure out what you have. Let an expert guide you as to what your options are while you're making those choices. I think that would be a good strategy, like we talk about all the time, right?
Absolutely. It's so my practice, we work by referral only. And sometimes I forget that in the early years of my practice, one of the big problems hurdles we'd have to get over is, when you're prospecting, you'd have to help people understand that there is a sense of urgency. Because for a lot of people,
right,
if they have their nest egg, let's just call it their 401k, if you save into that or a 401k from your first paycheck in your 20s until you retire when you're 65 or whatever, that's your biggest asset. A piece of what you could have taken home and spent on something fun went into that. And now you have this big chunk of money, and if you just wait your entire career to take a look at it, or you don't even take a look at it, you just kind of sail into retirement and cross your fingers, you're doing yourself a huge disservice. You know what I mean? And I talk about it a lot. Most people wouldn't just kind of wing it when it comes to buying a car or buying a house, or, you know, which college they want to send their kid to.
They'd research it.
They research it, and they you know, do a cost benefit analysis or whatever. And in many cases, you're talking about a nest egg, which is not always the biggest asset, but sometimes the most important. And you see people treating it like it's just kind of, well, it'll grow to what it's going to grow to. It is what it is. You know, we'll see what happens. And, you know, let's just say that for the clients that we work with, they're not comfortable with that kind of guesswork.
So in sum, I think what I hear from you is, yes, the market is still volatile, as is the economy. If we continue to do what we've always done, which is communicate with our clients, plan strategically, do our homework, and have a goals-based approach, we can still make this work in this, you know, unstable time. And for divorcing clients, get an expert in your corner as fast as possible to help you analyze what your options are now while you're making these big decisions, but also what you can do with what you're left with when you're done making those choices. Did I encapsulate that well?
Yes, and in fact, much more eloquently than I ever could. No, it's all correct. Look, there's all different parts of financial planning, but, you know, the world's not ending. We're going to be around, and we're not sure what certain things are going to look like 6 months from now or 6 years from now, but there's going to be companies and sectors, some that will survive, some that will thrive, many of which we don't exist right now. And there's going to be certain sectors and companies that do not thrive, survive, or exist. And for people who are winging it with their investments, whatever that means to them, if it just means picking an index fund and riding with it because it's cheap and easy, or, you know, whatever that means to them, they're doing themselves a disservice. They should take a little bit more of a scientific approach, because I think the vast majority of cases, it's going to be to their benefit.
Well, Scott, I so appreciate you being here today. I'm sure that all our watchers and listeners and people that are going to see this later are going to be really happy to hear that there's still some kind of strategy going on in the financial world, and that, like you said, the world is not ending. And I encourage them to get an expert and get on board and get strategizing.
Well, thank you so much, Sarah. This is great. You know, any excuse to show off my quarantine beard, I'll take. And no, this is great. I mean, keep putting out this type of information. You do a great job. And just thanks again for having me.
Thank you for being here, Scott. We'll talk soon.
Okay.
Bye.
Bye.